Welcome back, guys and girls, to another episode of Quick Tips. So in this tip, we're going to be talking about pattern separation and the importance. So firstly, we need to understand, where did pattern separation come from? Now, over my 9 years of experience, what I found is that I used to put too much emphasis on trend lines. I think we're all guilty of that at some point. And then I never really had the clarity that I needed. I used to think when it's broken that trend line, it's going up, or when it's broken that trend line, it's going down. And then I would adjust the trend line, and I didn't really know what is it actually responding to. It's when I started to realize years ago that patterns are the most accurate form. So with pattern separation, what we're doing is we're moving it to the most recent two touches to get the most accurate form of price. So let's dig into that with a quick tip, and I'm going to show you a couple of examples. So if we start off with the DXY, this is the most recent relevant price action. So I thought this would be a perfect example to do that. Now, if we look at the high time frame structure, if you guys and girls remember, we've been looking at this ascending channel for a long time, and we're seeing how this develops. So we have to take price back to gain a bit of perspective with this. So if we take a look in this area here, this is very important. So when we take a look in this area and we delete this current price, when we're looking at something like this going through price, it doesn't really make sense, does it, to just have this trend line going through the price. So we know there's been no progression, it's moved back in, it's likely to have been evolved, and it doesn't compromise this overall bigger ascending channel. The structure is still intact, it's still the same. Now if we just play that a little bit as we break, at this point it's not the fact that we're breaking, it's how we break. So when we go to the lower degree, let's actually go to the 1 hour chart now, you can see that when we break out of the structure, you can see we break out of the structure in the form of this descending channel type formation. This is really important, because are we going to evolve it to here, and then evolve it to here? We could eventually be down here. So it doesn't really make sense. So what we do is we actually rein in the trend line until we can get two significant touches to see if there's a new pattern forming. So if we take this back to around this area as we was breaking, we can see this. We originally had this evolved, and we're going to see, and this is where the forecasting comes in, we're going to see if this move comes down here, comes back up a little bit for the overall impulse, correction, continuation. We know that's very much a possibility. We've seen patterns play out like that a lot of times. Now as we speed up, let's speed this up, breaking through, as we break through the price, you can see we break through with an impulse, but it's what happens after is important. It's that corrective nature, and then we go straight back into the pattern. So at this stage, this is a good indication that, hold on a minute, we've had no progression, and we've literally just broken through in the form of a descending channel and then broken back through here. So let's zoom in on that, so then we can see the thought process of moving that trend line. So when looking at it from this perspective, does it make sense to then keep evolving this, or do we rein it back in to the most recent touches, see it as pattern separation, as that is one pattern of its own? This ascending channel, we're now creating a new structure. So we can get our most recent touches in here and see, is there a pattern forming here? Do we have this type of pattern, an expanding type formation? And as we evolve, we can see that we've got this overall descending type formation. We're just breaking at this stage, and we're seeing in this area where we'd be interested to look for selling opportunities, because the structure is still impulse correction. But it's the pattern separation of the most significant two touches to outline the clearest form of structure. It's the most accurate. As we move to the upside after we break, you can see it's still corrective, descending channel. Let's see, it goes a little bit lower, and it's at this part. So we've done it exactly the same thing again. See the descending channel? It's still moving out, and we evolve, and eventually we break to the upside. This is key. So this is the point where we say, well, this is what it previously looked like, and that we can see that actually at this point, even though it broke the pattern, it was in a descending channel. We can see this may be part of an expanding, more of an expanding type formation. Now we've had that significant touch, and we've impulsively broken above this channel. We can then say that, right, it previously looked like this, but this is actually what the pattern is showing us. This is the cleanest form of the structure. What it does is it gives us clarity. Sometimes we have to wait for a little bit more information, but once we get that, each and every day, we're getting a clearer picture. So we can now see this is the pattern, 1, 2, the break of the descending channel impulsively, that gives us confirmation. And as we move to the upside, we're now looking for this part here for that third touch. That's kneading this up to the wick. So we've got that there. As price moves to the upside, we're looking for that pattern there. So this is where it gives us clarity, because as you can see, we are literally in that area right here. Very, very close. Let's actually need to know right to the wick. We are on that third touch now, and we have the retrace. This is giving us a good indication that we may be getting some dollar weakness now, and we can pair that up on some dollar-related pairs, so something like pound-dollar long, for example. Looking at that kind of formation, that gives us clarity. If we would have just kept evolving trend lines, or having a trend line coming down from here and saying that's broken, having it from here, saying that right now that's broken and this is a retest, as you can see, the trend lines from these older price patterns, that's old structure, and this is new structure. So that is the quick tip. That is what we're focusing on. And we then know with clarity that we have two options. We're either going to get a solid rejection from here for a move to the downside, or this will break, give us a continuation, move back up, and then drop. So having that clarity and pattern separation has been an absolute game changer for me. So that is on a DXY. Now let's take a look at another example on pound dollar. So here we have pound dollar, guys and girls, and I want to dig into this example. So if you remember this particular structure, we've been looking at this big ascending channel for a sell setup for a very, very long period of time as it corrected up to the downside, as we can see this playing out now. More importantly, it's the pattern separation that really helped in this situation. So let's take a look. Now, when looking in this area, we previously had this trend line going through here. It's really important that when we're looking for new structure and looking for new patterns, that we don't just keep evolving to at any point and moving these trend lines. And this is what people often do, and I used to do exactly the same thing. I would see price break out of the trend line like this, and then I would be looking for the next point. So eventually we'd evolve that trend line. We have to go to the lower degree so you can really see what happens here. So if we go to the 1 hour chart. Now on the 1 hour chart, when tracking these type of formations, it's very, very important. So previously we had the trend line here, and we'd be looking for this break. We would then adjust the trend line and we would keep moving it, and then we would have that of significance. And the reason why this is important is because if we take it back and you think about something like this, for example, you've got this trend line in here, 1, 2, you're expecting we may be, and it's just an inflection point, it can still happen, but it's about realizing when something's changing and when there's a new structure. The two significant points is important, but let's see how this plays out very quickly. So if we just adjust this, so as we move back to the upside, you can see within this area here, so we have our significant points at this stage. We can start to evolve it and say, well, this is this point, that is the upward sloping trend line of this pattern. So it's already given me an indication that this is where the pattern is starting. 1, 2, and then I'm starting to look in this area. Where else could that be? Now we can use this as an inflection point, but notice how when we get to the trend line, we can say, well, let's see if we get a rejection here, right? What happens? We then start to break through. So then we can take it one step further and say, well, maybe that's not the trend line and I've got it from the right angle. This is where the lack of clarity starts to happen. We can say, if I was to move it to this part and I evolved that at that point, if you take it back, as it went a little bit higher, we could have said, well, it wasn't this rejection here, it was this rejection. And guess what? It breaks through there. We can then take it one step further and say, well, do you know what? It's now this point. This is the rejection. So we have 1, 2, 3 right here. And then what do we get? We break straight through. So it's a constant evolvement of going back through the pattern into the pattern like this. But what was actually giving us the clarity was the most recent 2 touches. So let's just take that back a little bit. Let me show you guys and girls. Let's just take that back. So before that starts to break, it goes just above there because the real pattern was the most significant 2 touches and separating these patterns. Point 1, point 2, parallel to this. This is the old structure, so we separate the patterns. This is the key to help. As you can see, that when we look at it from this perspective, that is this pattern. So we can see this type of structure, because this is the impulse up, that's the correction, and then this is the start of a new pattern. So this is why the pattern separation is key, because we have point 1, point 2, and rather than having the trend line from here like this to say there's the rejection, we then move it to here and say this is the rejection, and then it doesn't reject here, and then we break higher and see the third touch at the top, which of course this was an incredible trade that the majority of you guys and girls took within Falcon, and then we combined it with the fact that we break the high. So we go into that mass psychology type mindset in terms of getting people caught on the wrong side of the pattern and then utilizing pattern separation to then help with that. As you can see that we get that third touch here of the pattern, we get the retrace, the ascending channel, and then the move to the downside, which I know a lot of you in the community banked the biggest returns that you ever banked with this particular position. We get our impulse correction, multiple scale-ins, and you can see where we are now in the structure. That is why we do pattern separation. It's to see with more clarity what is actually happening in the market rather than taking trend lines from, you know, a longer term trend line. I mean, before I would even take trend lines like this and think that it has some sort of relevance, right? We would say, well, do you know what? 1, 2, 3, it's not exactly to the wick, but we would see in this area, I think that we're going to get a rejection. But the truth is, it was following this big ascending channel. The pattern was always going to play out the same way this pattern, 1, 2, 3, third touch, double top, breaks the high, gets people caught on the wrong side, the bigger arcing style nature, and then the impulsive drop with all these continuation patterns to the downside. So as you can see, pattern separation has just worked massively for me. It's helped me to have a lot of clarity when a trend line breaks, and it's helped me not to marry the trend lines, right? This is what we do. We often marry our trend lines. That's helped massively with that, and I've realized that a break of a trend line actually doesn't mean anything. How it breaks the trend line and the most two significant touches with pattern separation, that is the clearest form of accuracy of what's actually happening with the pattern. So that's why I use pattern separation. It's an absolute game changer for me, and I know a lot of you absolutely enjoy doing it. But for those of you new guys and girls that have had this for the first time, just wanted to give you a quick tip: why we do it, how we do it, and where we do it, and how we track it, and the difference of doing it compared to having these other trend lines. That way you've got clarity. You're not worrying about, is my trend line in the right place? You're literally going and reading off the same place that everybody else is doing, the most significant two touches. 1, 2, then we have our accurate trend line of where we're actually looking at the pattern to complete before it plays out. So keep it simple, guys and girls, and I hope that quick tip helped. And what I would recommend is now going through patterns and then marking them on for yourself. Try it as an exercise. Go on and actually put on the most recent two touches, use the bar replay tool, and actually see if you was previously looking at longer term trend lines, how would that have altered your state of mind? Would you have taken that trend line as significance? Now you can see what is actually playing out versus what you think was playing out. So I hope that helps and you took a lot of value from it, and look forward to bringing you more episodes. So take care, guys and girls, and I'll speak to you all soon.